Hey everybody, Gary with Basecamp Trading. Let's take a look at crude oil futures today. This is our 30-minute chart, and you can see that crude through the overnight was making higher highs, higher lows, higher highs, higher lows, and in an uptrend. During the London session, we kind of flattened out in crude, and you can see we kind of started going sideways. We actually triggered a shooting star right at the beginning of the US session, pushed down right into the 200 EMA. We know the 200 EMA is often very significant support and resistance. You bounced and then actually left this big bottoming tail right here. The next bar, it pushed higher, broke above the reversal doji. This finished in a reversal doji. Broke above the reversal doji, but didn't really follow through well. And at the time in the room, we were talking about how we were getting some bullish price action in crude, but until momentum went positive, you see right here, momentum was still negative. Until momentum went positive, crude wasn't going to be able to climb. Crude's market's not going to climb on bearish momentum. And the next bar, same thing, kind of pushed higher, left the topping tail, hadn't quite gone positive yet, and then finally this bar went positive. Crude made a nice move up and pushed up into our target. This is what that looked like on our Renko chart. We don't talk about this chart very often, but this is one that we use from time to time. This is our Heiken Ash sheet chart. And right in here is where crude was just starting to go positive. This bar right there is the one that on the 30-minute chart that momentum did go positive on. But you could see that on this wick out of the cloud, this doji wick out of the cloud, crude was forming bullish divergence right here. We had pushed down, made a little pivot, pushed lower, but we had higher momentum. So we had bullish divergence. This doji triggered our VSI, turned green, broke above the 50, fast and slow line crossed to the upside, and we had this doji out of the cloud. And Heiken Ashi, we just stick with these. As long as the bars are blue, we stay with it until we get a color change or we hit a target. In this particular case, 74.45 was our significant target on the upside. Your entry was off the doji, so you would have been in somewhere around 73, 99, 74, something like that. But this would have been good for probably $400 per contract. Just depends on how you traded that. You know, if you locked in target, you would actually got a little more, but you for sure would have locked in at least $400 per contract. If you wanted to wait on the more conservative trade, you would have waited for the break of resistance. That was at 74.22. You entered probably somewhere around 74.23, but still could have grabbed a couple $100 per contract trading up into target. But the key was waiting for momentum to go positive on the 30-minute chart. Because until momentum went positive, crude just wouldn't climb. And as soon as momentum went positive, then crude left the bottoming tail. The entire body of the bar was buying, followed up by another really bullish bar, and actually followed up by another bullish bar. Left that bottoming tail and pushed higher. So you need positive momentum for a market to actually move higher. And until we got that, crude didn't move. But once we did get it, crude gave us some really nice profit opportunities to the upside.